Good morning, everyone. Thank you for joining our Fireside chat on the 2021 Cannabis updates. My name is Naila Isa, and I'm on the marketing team here at Armanino. I'd like to go through a couple of housekeeping items before we get started. You can minimize or maximize the webinar pane during the presentation by using the red or orange arrow buttons in the upper left corner. During the webinar, we also encourage you to ask questions. In the webinar pane, you'll see a questions box that you can use to type your question and click submit. Our presenters will answer those questions as time permits at the end of the session. Second, for good audio quality, please check your setting to ensure the appropriate audio option is selected. If you're using a telephone, please click on the phone call audio option. Or if you're listening through your computer, then please click on the computer audio option. Please note, as a participant, you will receive a link to the recorded presentation within 48 hours. Now I'll pass it off to Mike, who will introduce our panelists and get us started.
Hello, everyone. I'm Mike Morrell. I lead the cannabis tax practice for Armanino. And today we have Ken Teasdale and Chris Lee joining me. Ken, you want to introduce yourself to the audience?
Sure. Hi, everybody. So happy to be with you today. I'm an audit partner here at Armanino in our Woodland Hills office, and I help lead the audit practice of our cannabis industry here at the firm.
Perfect. And Chris Lee, manager based in San Jose, California. I'm part of our strategy and transformation practice at Armanino, and then also help lead the consulting side in the cannabis practice at Armanino.
So today we'd like to highlight some of the issues that cannabis companies face as they expand their businesses. This business is growing quite rapidly, and even during COVID times, cannabis businesses are doing very well, and so there's a need for them to expand their brand, expand into other jurisdictions as they open up, mainly in the East Coast. And we're going to discuss some of the hurdles that these companies face trying to get there, and we're going to take it from a tax, audit, and technology perspective to give everyone different aspects of some of the issues that they're facing. So I'm going to start off with a question to Chris from a technology standpoint. There's a number of different offerings that Armanino has from a technology perspective to the cannabis industry, but if you're a smaller entity and you don't need, let's say, HR services, or you don't have needs for another aspect, what is the most important thing that cannabis companies need to really think about from a technology perspective?
Sure. Yeah. Great question. And to start off with, you really want to get onto a seed to sale software. So seed to sale software is kind of the core execution software for your business. So whether you're on the cultivation side, the manufacturing side, distribution, dispensary, that is where all of these transactions take place. And the reason why you should be on a seed to sale is because those connect to any state or local reporting software solutions. So like Metric or BioTrack THC, you could extract those manifests easily and submit them to those local governing entities to be able to track where that mother plant or where that manufactured product has been. So that's the number one software that we see small businesses or any type of business in the cannabis industry getting on. Secondary is getting an ERP. So making sure that your finances are in check for appropriate accounting purposes. So to keep those books in check. So what we see typically is seed to sale softwares, they do have a financial aspect, but they are lacking in true accounting type of software and processes as we see in typical ERPs that we help implement. So really getting an integration from a seed to sale software to an ERP really brings out kind of that holistic view on the execution side, doing your day-to-day business transactions, and then that flows to your ERP, which is responsible for the financial reporting side. So you could report out to your investors, be able to check, your dashboards for how you're doing on that particular day, that particular week, that particular month. So those are the two main software areas that we typically see for starting out.
And I would add that, having good data is the foundation of everything, because, if your data is not good and the numbers don't tie, then when it comes time for me to do, let's say, the tax returns, then, I'm not going to be able to, perform well if my numbers, are not the way they truly are. And so there could be issues with the tax return if that's the case.
Mm-hmm. Yeah, and I'm not sure, like, out of your experience too, of just a business just having a seed to sale, it is difficult at points to report out of some of these seed to sale softwares and getting true transactional reporting for tax. There is a lot of manual manipulation needed. So that's why we like to say, hey, both having a seed to sale and an ERP, because the ERP is really on that accounting side and built for that accounting minded person and personnel to be able to get that tax information or audit information or any other accounting type of information. So great point.
So there's really no one platform that does it all, right? You have to kind of pick and choose different platforms in order to get a holistic solution. Is that the case?
Exactly. Yeah. So, I mean, even in an ERP, if you were to select an ERP, no ERP is cannabis specific. Like, you can't go on to a NetSuite or a Sage Intacct, and they don't have cannabis specific modules. That's why we see today there are these seed to sale softwares like an MJ Freeway or like LeafLogix or like Blaze that are focused solely on accounting and tracking and tracing the cannabis products throughout their life cycle, whether it's cultivation, manufacturing, or anything like that, and then link back to an ERP to make it more so of that holistic type of solution.
Excellent. So I'm going to pivot now to the audit side of the practice and ask Ken, why would a cannabis company that's not publicly traded, that's not, got 50 million, 100 million in sales, care to do an audit? I mean, most of them, don't have loans or anything else where a bank or a financial institution is requesting an audit in order to get funding or something. But, tell us a little bit, some of the reasons why a smaller cannabis company would need to get an audit.
No, absolutely. It's a great question. What we're seeing in the industry is lots of movement, lots of mergers and acquisitions, lots of bigger companies looking to gain market share by picking up, whether it be dispensaries, maybe they are dispensaries already and they want to get a distribution channel, vice versa. It's all really positioning for potential future transactions. What happened with COVID, it just triggered tons of consolidation. So some of the larger entities, and sometimes in the Canadian publicly traded market, coming down south to the US to find distribution channels or dispensaries that make sense for their whole purpose. And they are asking for audits all the time. And what we're seeing is organizations that are not used to what an audit process is all about are scrambling a little bit. So number one, you're really positioning for a future transaction. Acquirers are specifically asking for this. It's really difficult you're knee deep in due diligence with a potential acquiree or acquirer, and they want 1 or 2 years worth of audits, and you've got to go try to somehow put that together. It's very difficult to do that quickly, and causes a lot of disruption to the company itself if they're not ready. Equity raises is kind of a third one, where potential investors who are looking, big time investors, and private equity is starting to get in now as well. Funds are getting set up specific to the cannabis space, and they're absolutely going to want to see audits on your company before they put $1 in. So these are some of the reasons we're seeing day in and day out from small or large cannabis outfits.
So saying that, trust me, I have 100 million in sales isn't good enough, huh?
No, sadly, it still is not good enough, especially in this world. I think cannabis, where it started, 4 or 5 years ago to where it is now, I've certainly seen an incredible amount of professionalism brought to the industry with real CEOs, real CFOs, folks that are business minded and not something that was a recreational passion of theirs that they said, hey, great, we can turn into a business. They want to see, because it's been so cash heavy driven, they want to know that someone's come in and look at this, can attest to it within all material transactions, and have real financials that an accounting firm has put their stamp on, so to speak. It's incredibly important.
You bring up M&A activity, and I've noticed a lot of that. It started in 2020 before the pandemic. Then when we got the pandemic in March and April, everything pretty much shut down. But the well-capitalized cannabis companies were able to really thrive and pivot their business model in that environment. And then in the third quarter, towards the end of the third quarter, and certainly in the fourth quarter of last year, we saw a lot of M&A activity pick up. And one of the things that we noticed, like in due diligence, is that, from a tax perspective, these companies did pretty well with, making sure they had a federal tax return and a state income tax return filed. But when it got down into the more nitty gritty taxes, the cultivation taxes, the excise taxes, a lot of the local taxes, we found a lot of errors, and unfortunately, especially in the local tax arena, the laws are not written very well. The people that are enforcing the laws are not very well trained. And so there's a lot of issues that we find where, they're collecting, but they're collecting at the wrong rate, or they're using the wrong tax base in order to, determine what the local tax should be. And it's unfortunate that these taxes are so complicated that, everybody would wish to have like one end of sale, like a sales tax, imposed, so that it's just clean and simple and easy to enforce and easy to administer. But unfortunately, that's not the case. And so you really need to pay attention to those other taxes, because in total, those smaller taxes can exceed your state or federal tax liability. And obviously, from a tax perspective, 280E is a huge issue for federal tax purposes. And, we're seeing a lot of companies that are, using 471C as a way to kind of skirt some of the rules there. And I strongly advise against that, because, there are certainly some opportunities using 471C to enhance your 280E deduction, but I wouldn't go so far as to say that 280E no longer applies. So be careful about that out there if anyone is trying to be aggressive in that manner. I'm going to switch it back over to Chris. Chris, there are a number of technology platforms that Armanino offers to the industry. Do you want to talk to us a little bit about some of those opportunities and choices that companies have?
Sure. So if you guys are venturing down this road, you might have noticed there are a ton of different solutions that might focus on particular areas of the cannabis industry. So being, hey, we only focus on cultivation, we only focus on manufacturing, or they might span across the whole gamut. So there's many different options, and it could depend on what software solution depending on your business situation that you would choose. So for Armanino, we provide software implementation services for ERP solutions. So Sage Intacct being one, we're the #1 Sage Intacct provider in North America for cannabis industry, and then also other industries. And then also we support and we also implement Microsoft's Business Central, which we also see in the cannabis industry. So these are more lightweight type of solutions for the cannabis industry as far as ERPs go. So it's not a huge enterprise type of Oracle solution or SAP type of solution, these are really lightweight that make sure that your books are compliant. They're ready for audit purposes, as Ken was just talking about, and they really address the key needs and transactional data that you need to be able to report out to those local government and tax authorities. Additionally, we have some strategic relationships with seed to sale software. So LeafLogix, Blaze, Backbone are a couple that we have strategic partner or strategic relationships with, and we've done numerous integrations with them. So integrating that seed to sale software to the ERP to kind of have that holistic transactional view, so there's no manual data uploads, there's no lag or missed transactions that you're pulling from the seed to software areas. Additionally, for the HR side, so we have a strategic relationship with Work for payroll and HR needs, and we see that fitting in with the tech ecosystem as well. So linking that data, that payroll transactional data into your ERP for appropriate finances, we've helped companies go through that as well. Additionally, for budgeting and forecasting, super important to see what your cash burn is on a daily, weekly, monthly basis, and to be able to budget and appropriately for any upcoming needs, any upcoming expenses. What we typically see there, and we implement Solver, is a very good solution that links in with Sage Intacct and also Business Central as an ERP, and then also Sage Intacct budgeting and forecasting. We've also implemented that at other software, at other cannabis clients. So the reasons why that we have chosen these strategic partnerships, or the reason why that we implement certain softwares, is that some of your common software tools like a QuickBooks or like an Adaptive for budgeting and forecasting do not support the cannabis industry. So we have developed a holistic technology ecosystem that attacks the cannabis industry, and whether you're a single kind of operator with just focusing on cultivation, or you're addressing the full gamut of from cultivation to dispensary, the tech stack that we provide and that we have a strategic solution for addresses all those key areas to really help with data flow and to help streamline those processes.
Yeah, and I understand that QuickBooks doesn't support cannabis, centric companies, and so companies that are using QuickBooks may find that they may get cut off and not be able to use their service going forward. So something for you to be thinking about in terms of, if you're using QuickBooks now, maybe it's time to look at another platform that is better suited for the cannabis industry.
Yeah, and NetSuite too, they were out of it, and then they went back into it, and then they pulled out of it, and then they went back into it for the North American type of companies. But the two ERPs that we offer, Sage Intacct and Microsoft Business Central, they are full bore in the cannabis industry, full support and building out solutions for the cannabis industry, which is awesome to see.
Nice. Ken, I'm going to go back to you. We talked a little bit about audits and the need for an audit, but one of the things that I think that a lot of companies don't understand is that in order to be audited, your books and records have to be in decent shape to be audited. So tell us a little more about some of the hurdles and challenges that companies face when preparing for an audit.
Yep, absolutely. Biggest number one problem that we're seeing in our audit industry is clients that just aren't ready. And the books definitely need to be more than decent, I'll tell you that, to be audit ready. A lot of clients aren't necessarily used to the world of audits and what that entails. And someone asks for an audit and they say, okay, I'll hire a firm and we'll get audited. And I think part of the attitude sometimes is, hey, the auditors will help us clean up our books and records. That is absolutely not what we're supposed to do as an independent third party giving an opinion on your financials. The books and records have to be supportable before we even go in there. And I think a lot of the solutions Chris is talking about are incredibly important and worth the investment, because there's nothing more frustrating as an auditor than having information that just isn't good. You start asking questions and it's not complete. They haven't fully reconciled some of the accounts, whether that be just simple cash accounts or inventory accounts or prepaid accounts, accruals, anything. That's an overarching big problem. Some specific things that we're finding, some pain points with our clients, is because an audit in the cannabis industry, you're going to have inventory, and no observation of that inventory has been done. One of the procedures we have to do as an auditor is observe your inventory on a sample basis. We obviously don't count it all, but we have to go in and do sample counts and confirm that this inventory exists. Having not been able to do that from the beginning of the year or the end of the year, the client needs to perform a rollback. We'll get in there as soon as humanly possible. Let's say today, February 25th, do an inventory observation, and you need to now roll back your inventory quantities and value back to your reporting dates, say 12/31/20, and then beginning balances of 12/31/19 as well. That has been incredibly challenging. Reporting hasn't been necessarily sufficient for inventory. You can get into the metric system, and that's a good starting point, but internally you really need to have that data available to perform an inventory rollback. We've been outside of audit. We've been hired in our outsourced business units to help cannabis clients perform these rollbacks because they're complex. Sometimes and many times, another pain point is complex equity structures. There are numerous entities in some of these org charts to kind of navigate through the cannabis landscape. Many times there's going to be options or warrants that have not been accounted for. That has an accounting effect, and you need to value those and actually get them on your books and records. Many times that isn't done, and it's a surprise to clients sometimes when they have to, they have to account for it. So be mindful of that as well. And then the ever popular issue of cash revenue, and can you support it? Do you have a bank that it went into? Do you have a cash log? If it's simply going in and out of a vault, do you have good records that show what money is going in and what money is going out? That's proved to be problematic as well. So those are really the kind of the high points. Then you start getting into things like convertible debt and more complex equity or debt structures. And, clients don't necessarily think that has a big accounting impact, and it does, both from a books and records standpoint and from disclosures on the financial statements. We've got to disclose lots of the particulars of these types of transactions so the reader understands what's going on. And if the underlying data isn't there, it's incredibly difficult and very expensive to get it all vetted out to be something that we can put an opinion on.
Ken, you mentioned something about inventory counts, and I know during COVID that the way that you do those inventory counts has changed because you can't necessarily be there in person. Why don't you go through a little bit about how you've done that remotely?
Yeah, that's been interesting, and not just cannabis, but all of our clients who have inventory, but specific to cannabis. I've even had to do several myself, and here's how we're doing them. In a remote environment, we're doing them through Zoom or FaceTime. I will be on my end, on my screen. We'll send a Zoom appointment out. It will go to one of their inventory warehouse personnel. They will bring literally a laptop or their phone into the warehouse. I will have already made my selections. They've given me in advance their inventory detail. I've told them what items I'm going to be sampling, and they will go into the warehouse and find it so I can then trace it to my sheet. Sometimes we have two people on the client's end. One is literally holding the camera and the other one is doing the counting. So they have to do the recount for us since we're not physically there. That's usually what we do if we're in the warehouse. We're counting so we can attest to it. Now we've got to do this remotely, so I am watching one of their warehouse personnel count the inventory, whatever it should be, finished goods or pre-rolls or flour, some of the distillate in hemp clients as well, and we have to weigh it. We've got to be able to visually see the whole process. And although challenging, we've really ironed it out towards the middle and end of the year last year. As it was apparent, we cannot go into these warehouses. It just is not safe. So we had to pivot, and we wrote procedures around how to do a remote inventory observation. We've had numerous staff participate in it, and it's gone a lot smoother than you'd think. The big key is, do you have good internet in your warehouse? If not, everything's off the table, and we got to kind of rethink it. That's when sometimes FaceTime works a little better than a Zoom invite. But they've gone well, and we've been able to satisfy our procedures and standards on observing their inventory.
Yeah, who would have thought that you would need to have good internet or cell phone service in your warehouse? But
yeah,
here we are.
So one other point that I want to bring up around like audit readiness is, Ken, I think maybe we've encountered this on a client before, but for like our boss team, our business outsource services, like really addressing the control risks around processes, that really helps align the books to be audit readiness for you guys to come in, so you're not asking those type of control questions or anything like that. So for AR, cash, inventory, kind of those high risk areas, you guys are taking a look at the controls and seeing, hey, are there controls around it? How much do we really need to dive in and look at it? So for the people on the line, I think really buttoning up your controls will then align to have your books in better order and ready for somebody like Ken.
Totally true, Chris, and it's a great point. And really the first question is, do you have any controls at all? Start there, because there's been many where it's, people are not necessarily used to documenting or following true internal controls in all the areas Chris mentioned. And you got to have them documented. What is the process? Whether it's specific names or just titles of people, what are they doing along the way? Because we've got to walk them through. We've got to make sure that control exists, and does it appear to be implemented correctly? Sometimes we'll test the controls to see if it's operating effectively, but many times we're taking a substantive approach and we're just looking that controls exist. And most of our comments as we come out of audits that aren't significant deficiencies or material weaknesses, if we're just giving management comments, best practices, segregation of duties and lack of proper controls is probably the first and foremost that we're recommending to our client to implement a little better.
And you certainly want to do this because, I think a lot of cannabis companies think, well, we got security cameras. We know that inventory is not going out the back door, that cash is, it's counted, hopefully by more than one person so that there is at least some control to cash. But, in this era of electronic, theft, I mean, you can have people manipulating the books and doing some things so that they end up getting extra bonuses, paychecks, whatever. And so there are a number of reasons why you'd want to do this. Just basic standard operation procedures, for a company, cannabis or not.
Absolutely.
So I'm going to move on a little bit. Tax side of things again. There was a lot of attention paid towards the PPP loan program during the pandemic in March and April, and cannabis companies were not eligible for those benefits that were available from the SBA. And what a lot of companies, particularly in the cannabis industry, thought was, well, we're an essential business, we're allowed to stay open, we can't get PPP loans, and so therefore this is as good as it's going to get for us, and we just have to, deal with it. But the CARES Act provided a number of benefits to all companies, cannabis and otherwise. And one of them is employment retention credits that is often overlooked. There's also some other opportunities there that have now been extended that companies should really look into. And, one of the things that we try to do and pride ourselves here at Armanino is that, hey, let's look for the opportunities, to help cannabis companies. They got to pay taxes, but there's certainly ways where you can find credits and other things that will help reduce that burden, because we all know that they're taxed at a much higher rate than any other industry group. And so you've got to be efficient, and you've got to be very careful to make sure that you're taking advantage of every opportunity that's available to you. You know, there's R&D credits and other things that may be available, maybe not on the federal side of things, but maybe at the state level. So we always look for different opportunities out there, and the way we see it is every little bit helps. So
oh, just to follow up on that, I mean, is that for the tax side, and maybe this will better help just kind of our process on the tax side, for a tax kind of advisory engagement, or just kind of painting the picture, is that something that we go in and look at? Are we looking at all of these, R&D credits, any of the PPP loans? Like, what kind of paint the picture for what we're looking for to kind of help these businesses out, to gain benefits from these types of credits and other areas?
That's a great question, Chris. And what we do is somewhat like when you go to a doctor and you have a checkup. We can do a checkup, if you will, from a tax perspective, where we go in and dig through and figure out what are the opportunities on the tax return that are not being taken, or maybe something is being presented incorrectly on the tax return that could be a benefit to the client. And so we take a holistic look at, okay, what are you doing right? Let's just keep that the same. What are you doing wrong? Let's change that. And what are opportunities that you're missing? Well, let's look into those and see if they're applicable to you. And that's one of the great things about the employee retention credit. That's a credit you get for keeping an employee. I mean, and you can spend that in such a positive way to your employees and say, hey, look, I'm not going to lay you off or fire you, or put you on some sort of deferral plan. We're going to keep you on board, and we're going to get basically a subsidy from the government to keep you as an employee. And I think it's a wonderful program that just needs to be further looked at and see how it's applicable to different companies. So we're going to move on. Chris, I'm going to come back to you. You talked about a number of these different technology platforms and what they can do and everything, but what are some of the challenges of implementing and getting these systems set up?
Yeah, so like any transformation effort or establishing a new company and a backbone of a company with software, it takes a significant amount of time and effort. One, making sure to plan out what do we want our future state to look like? What's our implementation plan going to be? And then actually implementing the software. So working out all the kinks with the implementation efforts. What types of transactions do we want to either track? What's our chart of account structure going to look like to be able to properly report our financial statements and give it over to Ken and the audit team? And then additionally, how is this going to make our employees feel at the end of the day? Like, what's our change management strategy? What's our training going to be so there is the highest level of adoption for our new technology stack? So all of these efforts, I mean, it doesn't take a significant amount of time. I think we could still manage our day-to-day jobs, but on average, what we typically see, it takes 5 to 10 hours per that key stakeholder, whatever module that we're implementing, time and effort to be able to get the process right in the software tool, and to be able to appropriately capture whatever we want to capture for that particular business structure or entity, whether it's on the cultivation side, manufacturing side, etc. Additionally, too, is it's highly important to have a clear communication and transition plan of how we're going to transition off our current tech stack, if we already have one established. What's going to be kind of the manual work in between? How long is that going to last? What are the benefits of switching? Communicating that to employees, one, very much so increases the adoption rate for people to be excited and to want to adopt and push forward and use the new technology. And two, it lets people know what's coming down the pipeline. They don't feel out of the loop on these key technology decisions, and they feel a part of it. So being able to communicate effectively for some of these transitions is a way to avoid a challenging situation when we're changing processes or adopting new technology or getting trained on something new. And then that goes back to, establishing that clear plan. So not only to have a clear implementation plan, but then also to have a clear transition and change management plan for your people. That's very, very helpful in avoiding some of these typical challenges that we see when adopting these new technology stacks.
So Chris, can companies adopt like a phased approach where they can do phase one in year one and then go to phase two the next year or something and evolve and adapt their technology platform as their company grows and as they end up having cash to kind of pay for all of this technology?
Yeah, no, that's a great point. And yeah, we don't recommend just dropping in an entirely new tech stack all at once. We need to focus on, hey, what's the highest impact areas that we need the technology for? So if it is the execution side of implementing a seed to sale software, then we would attack that first, and then we would want to move into the ERP and financial reporting side, and then any other additional areas. HR, budgeting and forecasting, maybe a new POS system for a dispensary. Those are more so of add-on luxuries once we have kind of the core baseline of the seed to sale and the ERP. But taking on everything all at once is a significant effort, and you will run the risk, if you're trying to do that all at once, of burning your employees out. So really being able to leverage your implementation partner, whether that is passing more work off to them or another third party to help support you. So if time is going to be taken away from an accounting person doing their everyday job because they're implementing a new technology software, well, maybe we should consider outsourcing some of that accounting work to a third party to help alleviate some of that stress and effort. So it all depends, and going back to Mike, your point of what does that transition plan look like and how are we going to approach it, and what's the timing and effort that we want to approach it with, and then we make those decisions on whether or not to pull in a third party or not, or when to implement a particular set of technology areas.
And one final question I have for you about all this is, what about remote installation of these platforms? I mean, is like Ken was doing his remote inventory counts. Does the company have to have their in-house IT person to help install these programs, or do you have to have a team member go out physically on site to install these programs, or can this all be done remotely now?
Yeah, so that's the benefit of the cloud. So we could do it all remotely, and we typically do it all remotely. So whether or not you have an IT person in-house, awesome. We always want to include that person. But if there isn't an IT staff to support it, or supporting your current IT structure, that's okay too. We've implemented it with that. So one of your accountants, the controller or the CFO or whoever, is going to be that admin person for the ERP or for the seed to sale. So we would work with that person, and that is the key stakeholder that we would be working to implement and train these technology installations, and they can completely be done through Zoom. We do it every day through Zoom. Even pre-COVID, we rarely came on site to install some of these softwares. We might have come on site for training, but we could completely do all of these installations remotely. So not a trouble working through Zoom.
That's great to know. All right, Ken, I'm putting you back on the hot seat again, and we're going to talk about audits. But now I'd like to find out more about the different types of audits that are out there. There's GAAP audits, there's IFRS audits, and what are the differences between the two? And do I have to be a certain size company in order to do one or the other? What are the costs and everything associated with all of that?
Yep, definitely different options depending on the need for the audit and whether there's a transaction that's imminent and a merger or reverse takeover on a Canadian market, something like that. And believe it or not, we're starting to see reverse mergers on the US OTC market. And you'd say, how's that possible? It's federally illegal. The SEC is not getting too crazy at the moment about smaller companies that are on the pink sheet that are possibly doing transactions in the cannabis space. It's a little bit under the radar. Still technically legally not supportable, but we're starting to see it. So the point of why I say that is, depending on if some sort of reporting exchange is involved, whether it be US OTC or the Canadian exchange, you might have to do a different type of audit with each. Whether you're familiar or not, the traditional audit is United States GAAP, which is General Accepting Accounting Principles. That's every company that gets audited that's in the US under US standards. That's what we do all day long, whether it's cannabis or not. That's kind of step one. You would need to move it to a different level and different standards depending on the potential transaction. So another option might be a Pcaob audit, the Public Company Accounting Oversight Board. These are the types of audits that every US NASDAQ or New York Stock Exchange company has to do. Why on earth would I have to do that? Well, if you're going to potentially be on any kind of exchange, Pcaob standard might be necessary, and every transaction is different. It depends on, are you going to end up being the reporting entity, kind of reverse merger? Are you being acquired? And how big is your portion to the acquirer's portfolio? That's what's going to determine whether you need a true Pcaob audit or not. And costs go up from there. In general, just throwing out kind of a flat number, Pcaob audits are about 25%, 20 to 25% more than your traditional US GAAP audit. So keep that in mind. Sometimes, if there's some sort of international exchange happening, you might need to have an IFRS, International Reporting Standards audit, where there are different standards for different types, how inventory is accounted for, how revenue is accounted for. There are different differences amongst these standard groupings that would produce a different financial statement with a little different look. Some of the descriptions of inventory might be biological asset versus inventory, and that's accounted for a little bit different on an international basis. And then lastly, if you're going to be reporting somehow on the Canadian exchange, you might have to have a Canadian GAAP audit. Again, those standards are a teeny bit different, similar to IFRS or international standards, but kind of a bolt-on to US GAAP. All those reports look and feel a little bit different, and it really depends on what is the reporting agency you're going to be potentially working with. Costs will vary in between. So just say, hey, I need an audit. That's sometimes not enough information. You might have to dig a little further. We are happy to help you, obviously, in that decision-making process, but many times the acquirer will dictate what type of an audit they need. And things like independence, that's a big deal. When you move from US GAAP to a Pcaob audit, independence is one of the biggest differences. Where we have to be very careful about impairing our independence. Things like you have to actually draft your own financial statements, which can be challenging internally for some cannabis organizations. They're not used to what a GAAP audited financial statement looks like, drafting all the footnotes, the cash flow statement, the whole kit and caboodle. So if you're not prepared for that, if you don't have the right internal resources, that's going to be a real challenge for you. And again, we've got to be careful. We can make suggestions, but we can't be involved in that process. So it's really important to understand what type of reporting standard you're going to be using, because that will then dictate what we do as auditors and how your financial statements look.
And Ken, I think we've done some really large audits too. We did, small companies, but we've done large entities. We did recently completed an audit for a SPAC, which was the largest cannabis SPAC out there, certainly ever to exist. And then also, I think we're licensed in Canada. Would you like to talk about those two projects?
Yes, absolutely. Obviously, we're very proud to be part of the SPAC in Canada that you just mentioned. That was when it got released in the public, was the largest Canadian SPAC ever in the history of SPACs in the country. That was very exciting to be a part of. And we were able to do it because we as a firm are registered with the Canadian Oversight Board, the equivalent of the PCAOB in the US. We have registered there in Canada. That allows us to do Canadian audits for Canadian issuers. So again, that's going to be a different look and feel, different reporting entities, different standards. So luckily as a firm, we're able to do all of that.
All right, thank you. I'm getting a lot of questions asking me about, what about the blue wave and how is that going to affect cannabis companies from a tax perspective? And, certainly having Biden win the White House and Georgia now having two new senators, Democratic senators, helps with that effort to get some sort of a national legalization of cannabis. I see a lot of hurdles with that. There's a proposed bill out there that would impose a 5% excise tax on a federal excise tax on cannabis. And that would just further burden the industry with, additional taxes to this. Now, 280E is another big issue and everybody wants 280E removed. And, unfortunately, I just recently heard of a Colorado cannabis company that had an appeal to the US Supreme Court, and the Biden administration's DOJ representative intervened into that case and supported the IRS's, cause to basically, go after information to, support 280E and keep those deductions, to a minimum. And so, as much as everybody's optimistic about having, a Democratic, led House and Senate, and Biden being in the presidency, it doesn't appear that there's going to be any quick solutions to overturn some long-term problems that the cannabis industry has faced from a tax standpoint. And I think that that's just going to, continue. I'm hoping that the best that we're going to get is maybe Safe Banking Act will pass so that at least cannabis companies will have free and clear opportunities to the banking system. But as we've seen under the 2018 Farm Bill for hemp, sometimes getting, federal legalization is not as good as what you had before because, hemp companies are having a tremendous time trying to get bank accounts. They're still having issues with state regulators that see hemp as being, cannabis, and therefore it looks like cannabis, it smells like cannabis, therefore it has to be cannabis, but it's really hemp, and so they shouldn't fall under those rules. And so there's a lot of misinformation and confusion out there, and we have to wait and see how things develop. But hopefully, we have some good things going for us, and certainly more and more states are adopting adult use cannabis, which will put more pressure on the Congress to change things from a federal standpoint. So, Chris, finally, I'm going to go back to you one last time here. What are some of the other considerations that business leaders should consider when rolling into a new tech stack?
Sure. So a couple gotchas that we have seen in the industry is a huge one is labor costing. So some of these seed to sales might not be able to perform labor costing, and then it's a whole manual effort for the accounting and finance team to be able to put together those labor costing details, calculation manually on spreadsheets, and the whole gamut. So being able to have a seed to sale that automates that and performs that costing measure is huge, 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 huge. So, and then that data will then flow into your ERP, and you'll be able to financial report out on it. So, and then the next one is really making sure, and I mentioned this before, making sure that your chart of accounts is set up appropriately. Looking back at your chart of account strategy, where or what do I want to be able to report on, whether it's key KPIs for the particular area or sector that you're in the cannabis industry, or if you're vertically integrated, what do those reports mean? Like, how are they defined? One, and then going back to, okay, how is my chart of accounts set up? So then I'll be able to get that accurate reporting, whether it is detailed revenue by particular SKU, whether it's a grouping of SKUs, whether it's grouping by department level. So it really gets back to the transactional core level for that chart of account structure. So those are kind of the two key kind of takeaways that when selecting a new technology structure and then also implementing it, that you should be very, very aware of, because it will have significant downstream impacts to your financial reporting.
Ken, and I want to get back to you about audits, of course. What about timing? Obviously it's going to vary depending on what size of company we're talking about, but there's certainly some considerations to think about, whether you're going to have a 1-year audit, 2-year audit. What are the pluses, minuses of doing one or the other?
Yeah, it's always a decision-making factor. Sometimes you're required to do, say, 2-year audits for the particular exchange you're going to be on, whether it's US OTC or the Canadian exchange. Usually that's a 2-year audit requirement, which can be difficult and for an organization to just get ready for 2 years worth of audits. Single-year audits, remember, people say, okay, well, we're just going to do 1 year's worth of audits. Please remember that we have to go back to the beginning balance of whatever reporting period we're looking at. So let's say we are asked to do a 12/31/20 audit, calendar year end client. We have to look at the balance sheet and the income statement, obviously as of for 2020 and as of 12/31/20. We've also got to go back to the balance sheet only of 12/31/19. We have to do procedures on beginning balances. So we've got the two bookends of the year, 12/31/19, 12/31/20. People don't necessarily realize that. So year one, if you've never done an audit before, is an audit and a half, is what it turns into. Then you start getting regulated as you go forward and you're on track for year over year. But that first one can be a little challenging. And, opening audits, if you've got everything ready, I mean, it is, good 30 to 45 days to issuance from when we're there in the field to when we're issuing on a good company. So if you have to get kind of prepped and there's some stumbling blocks and issues along the way, which happens with everybody, whether you're in cannabis or not, but particularly in cannabis, generally looking at 45 to 60 days to be done with that, just so you understand timing on how that would work, what you need to do to prep and plan and organize so due dates are met. This is definitely not something we can just do in 2 weeks, or any practitioner can do in 2 weeks. So please keep that in mind. And if you go to a 2-year audit, you're generally looking at probably 60 to 90 days. Again, unless your books and records are super squeaky clean, you're looking at a good 2+ months to be able to get that done, issued, signed off, depending on what type of audit you have, US GAAP, Pcaob, etc. So it is a time investment. It is not something that's done overnight, nor do we obviously take lightly. And so just know that planning for potential transactions, looming transactions that are out there, due diligence, etc., got to plan accordingly, because it's just not something that can be done overnight.
Very good. One thing I'm really happy about here at Armanino from a tax department side of things is that we offer basically a holistic solution for tax for cannabis companies. So in addition to just doing the federal income tax, the state income tax, we also help clients with all of the cultivation taxes, the excise taxes, the local taxes that are really hard to administer that I spoke about earlier. And, you know, as these organizations get larger, they're also going to need other services such as, you know, transfer pricing. They need to figure out if they're selling from one entity to another entity, they just can't pick and choose a price that just seems reasonable, because that's the kind of thing that the IRS will challenge. And you want to have a transfer pricing study done to show what is the market value of these goods and services that are going between these two entities, and what would a third party charge for those same goods and services, so that you have, you know, some sort of review and independent, you know, evaluation of the goods and services, so that it's, you know, going to get challenged. You know, every cannabis company is going to get an audit. So the more documentation you have, the more things you have buttoned up like this, the less likely that you'll have a big, you know, surprise audit liability at the end of an audit. And so we highly encourage, you know, clients to do what is necessary in order to minimize, you know, those potential liabilities. You know, another thing that we're getting a lot of questions about is valuations. You know, cannabis companies, you know, 2 years ago, if all you had was a license, they were worth a ton of money, you know, with no operations. Now the industry has matured quite a bit, and now there's many more choices. And so now there's a track record. You know, what sort of, you know, revenue did you generate? Companies need to be, you know, in business for a couple of years, you know, 2-3 years at a minimum, and an evaluation is maybe necessary if you're looking to sell the company, or maybe a SPAC is looking to buy your company. You know, you need to be prepared so that the valuation comes out to your expectations, and you won't know that unless you have good books and records like we were talking about earlier. Your systems are in place so that there's ways to make sure that, hey, your POS system says that you sold 100 items. Your accounting reporting system shows that it sold maybe 98 items. Your inventory control system says that 57 products were taken out of inventory. Well, none of that ties, and that's not going to look good. So you want to make sure that you have all of these things that we've been talking about today in order, so that your company is a $100 million company like you think it is, and you'll get that valuation because all of these things, you know, add up to $100 million, and it'll be a great day for you to sell the company. So in closing, Ken and Chris, do you want to have some closing remarks before we have to wrap up today?
Sure, I'll jump in. I know audits can be disruptive internally. Believe me, I understand. But dovetailing on what Mike said, having your books and records as clean as humanly possible will drive down your costs and the timing involved in audits. There's nothing more frustrating for both sides, both for you as a client and us as practitioners, to find surprises as we dive in. Like Mike said, things aren't tying. None of the supporting records are supporting what's on your trial balance. And it takes an enormous amount of time and effort to reconcile those to where we're comfortable, you know, putting our opinion on your financial statements. So, albeit painful, you know, my recommendation is, if you don't have the internal resources, hire a third-party firm to come in and help you get your books and records going. It can be a short-term investment that will pay off greatly in the end. Audit will not be as disruptive and won't take as long, and you'll be able to come out, you know, feeling good about your books and records, and being able to have it be supportable and hand over to a potential acquirer that is looking at your company, and vice versa. So that's my recommendation.
Chris, you have 2 minutes.
All right. Well, now one. But thank you guys for tuning in. And yeah, I mean, I know the technology road, it's scary. There's a lot of different options. We and our team have thought through this significantly, years and years and years of experience with this, and have implemented proven technology stacks to cannabis clients, no matter what area of the vertical that you're in, or if you're vertically integrated. Open door, we're happy to have those discussions on how we could help you and help implement that technology. So feel free to reach out.
Well, I want to thank our panelists today, and thank you in the audience for attending our Fireside Chat today on cannabis. And, feel free to reach out to any one of us for any of your accounting and cannabis tax needs. We will look forward to seeing you again later. Thanks.
Thank you.